Today, we're going to dive into a topic I know many of you are deeply interested in: stocks that pay monthly dividends. In the world of investing, the possibility of generating a steady stream of income is very appealing. And when it comes to monthly dividends, the idea of receiving payments every 30 days, almost like an additional salary from our investments, is even more enticing. This year, several companies stand out for their commitment to returning value to their shareholders. But before we dive into the list, I want to make something very important clear. Investing in stocks always involves risk. Dividends are not guaranteed, and companies can reduce or eliminate them. Our research will focus on companies with a solid track record and fundamentals that suggest a high probability of maintaining those payouts. The goal of this video is not only to provide you with a list, but also to explain why these companies are worthy of your attention. Remember to always do your own thorough research before making any investment decisions. Consider this as a starting point. Let's start with the first action on our list. 1. Gladstone Commercial. It's one of those companies that may not be on the front page of major financial headlines, but that quietly generates very consistent returns. It's a REIT, a specialized real estate investment trust. What does it do exactly? Well, it acquires, owns, and manages office and industrial properties throughout the United States. Its business model is based on long-term leases with a variety of tenants, which gives it a predictable and stable income stream, ideal for paying dividends. Today, it has a very attractive dividend yield of around 8%. 2. Crown Castle. Second on our list is a true giant in the telecom infrastructure sector, an essential business in our connected world. It's a REIT that owns, operates, and leases a massive network of cell towers, small cells, and optical fibers. Think of all those antennas you see out there. They own a lot of them. With the rollout of 5G and the ever-growing demand for data, telecom infrastructure is more crucial than ever. Its long-term leases with major mobile operators ensure a stable and predictable income stream. While its dividend isn't strictly monthly, its stability and essential role in the digital economy make it worthy of consideration. Crown Castle currently offers a dividend yield of around 5.4%, a respectable return for an infrastructure asset. 3. Global X Super Dividend ETF. If you're looking for diversification and professional management without having to pick stocks one by one, this is the one for you. We're talking about an exchange-traded fund, or ETF, designed to invest in 100 of the world's highest dividend-yielding stocks. By investing in an ETF like this, you're not buying shares in a single company, but rather a diversified basket of companies. This is great because it can reduce risk compared to investing in a single stock, as the decline of an individual company has a smaller impact on the fund. It's an excellent option for those looking for global exposure and a monthly income stream with less effort involved in individual selection. SDIV offers a dividend yield that currently sits around 9.5%, a very high yield for a diversified ETF. 4. Energy Transfer. Now, let's switch sectors and look at energy infrastructure, a field with enormous potential for generating stable income. This is a midstream energy company, meaning they operate an extensive network of oil and gas pipelines, terminals, and processing plant for natural gas and petroleum. They are the vital link between energy producers and consumers, handling transportation and storage. Their revenue comes primarily from fees for the transportation and storage of these resources, making them less sensitive to commodity price fluctuations than direct producers. It's a company with massive infrastructure and solid cash flow to support its monthly distributions. Energy Transfer currently boasts a robust dividend yield of around 8.5%, a very attractive return in the energy sector. 5. Gladstone Capital. We move on to a company that benefits from the venture capital industry, but with a focus on revenue generation. It's a business development company, or BDC, a company whose primary purpose is to finance and support the growth of small and medium-sized, unlisted businesses. This company invests in mid-sized companies by providing debt capital and, occasionally, equity capital. They focus on providing debt capital to these companies, with a strong emphasis on generating revenue through the interest they charge on those loans. BDCs can be attractive because of their high yields, but it's crucial to understand their business model and the risks associated with investing in private companies. Gladstone Capital has a long history of monthly payouts. As of today, Gladstone Capital offers a dividend yield of around 8%, a very attractive dividend yield for a BDC. 6. Blackrock Global Dividend Trust. The sixth company on our list operates in the investment management sector, specifically through a type of fund that could be very interesting. We're referring to a closed-end fund that seeks current income for its investors, in addition to long-term capital growth potential. It achieves this by investing in large-cap stocks of dividend-paying companies globally. Closed-end funds can be a way to gain exposure to actively manage portfolios with regular distributions. It's important to understand their fee structure and the discounts or premiums at which they trade on the market. This fund currently has a dividend yield of around 7.2%, a high yield for a fund of this type. If you find this video helpful, please give it a like and subscribe to the channel so you don't miss our next content. Let's continue. 7. CocaCola Consolidated. The seventh stock we want to highlight is a company in the consumer packaged goods sector, a business that is often very stable. Don't confuse this with the Coca-Cola Company, the beverage giant. This is the largest independent bottler of Coca-Cola products in the United States. Its core business is distribution and bottling, which generates a fairly consistent revenue stream through stable sales volumes. While it's not a traditional monthly payer, the stability of its business and the essential role of its product in everyday consumption make it an interesting addition for those looking for stability and a good dividend, even if it's paid quarterly. Currently, Coca-Cola Consolidated offers a more modest dividend yield, closer to 0.5%, reflecting a greater focus on capital growth than on distributing high dividends. 8. Ares Capital. Our eighth option takes us back to the BDC sector, and this is one of the largest and most respected. It's the largest BDC by market capitalization, and they specialize in providing debt and equity financing solutions to middle-market companies. Their size and scale allow them to access a wide range of investment opportunities and effectively diversify their portfolio. Their payment history and experience management make them a great option for those seeking monthly income. Today, ARCC boasts a dividend yield of around 9.4%, a very attractive return in the BDC space. 9. Stag Industrial. Real estate-focused company, but with a specific industry twist. It's a REIT that specializes in acquiring and managing single-tenant industrial properties across the United States. This includes warehouses, distribution facilities, and light manufacturing. With the rise of e-commerce and the need for more logistics space, the demand for industrial space has grown significantly. Its long-term leases with diversified tenants provide a stable and predictable income stream, supporting its monthly dividends. It's a great way to gain exposure to the growth of e-commerce. Currently, Stag Industrial offers a dividend yield approaching 4.2%, a decent and stable return for an industrial REIT. 10. SBDR S&P Dividend ETF. Let's move on to our 10th option, returning to an ETF that offers diversification in the dividend market. While this ETF doesn't focus exclusively on monthly dividends, it invests in the highest dividend-yielding stocks in the S&P 500 that have an impressive track record. They've increased their dividends for at least 20 consecutive years. The reason we're including it is because, although its payout is quarterly, its focus on consistent dividend growth makes it a good foundation for any income portfolio. This ETF is ideal for long-term stability and growth. It features a dividend yield that currently sits around 2.7%, which is considered a conservative yield, but with a focus on reliability and dividend growth. 11. Enterprise Product Partners. The penultimate stock we want to introduce you to is a company that operates in a vital sector for society, energy. Like Energy Transfer, it is one of the largest midstream energy companies in North America. They own and operate a vast network of infrastructure assets for crude oil, natural gas liquids, and petrochemical products. Their revenues are primarily from fees and volumes, making them less volatile than direct energy producers. Their scale, asset diversification and solid customer base allow them to maintain consistent monthly distributions. Today, Enterprise Products Partners offers a very competitive dividend yield of around 7.4%, a good return for an infrastructure asset. 12. Horizon Technology Finance. And finally, our 12th stock for 2025. It's another BDC that focuses on providing venture capital to early-stage companies in the technology, life sciences, healthcare, and cleantech sectors. This type of financing is crucial for many startups that need capital to grow. Their exposure to innovative companies and an interest income stream allow them to maintain a monthly dividend. The risk associated with investing in venture-led companies is higher, but the potential for returns can also be higher, so it's important to consider this. It currently has a dividend yield of around 10.5%, a very high yield typical of BDCs that invest in riskier companies. There you have it, a dozen stocks and ETFs that offer the possibility of generating passive income monthly until 2025. Dividend investing is a valid strategy for building long-term wealth and generating steady cash flow. However, don't forget the importance of diversification and consider building a well-balanced portfolio. It's also essential to understand that dividends aren't static. Companies can adjust their payouts. Therefore, constant monitoring and review of your portfolio is essential. Stay informed about the financial health of the companies you invest in. Please leave a big like if you found it helpful, share with your friends, and, of course, subscribe to the channel if you haven't already. What do you think of these actions? Would you add any more to the list? See you in the next video. See you soon.